Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of LME 3-month copper and aluminium.
LME 3-month copper. A third bearish black crow yesterday with a significant move and close below the 50% Fibonacci line for the 2022 move at 8,900, and significant move, though not a close as yet, below the ever so slowly rising medium moving average, currently 87.38. The market is overall back within the broken bull channel, currently 80.14 to 91.24, which is highlighted in dark blue on my daily chart. The question is still whether this move back in and below has mended the break above the upper bull channel line, currently, as I said, 91.24. The jury is still out on that one, though we seem possibly to be coming to a favourable decision. We also now have a question as to whether the broken late January downtrend, currently at 88.93, has been repaired. The answer to this one is less obvious and more complicated, and on this one I am not sure. Looking below, well, yesterday the market punched down through the flatlining medium moving average, currently 87.38, though it's still closed above it. The next support below is the April 2012 high at 86.65, and then the interesting 50% Fibonacci line of the October 2020 to March 22 move at 85.56. Meanwhile, we'll still have overhead the primary target X in the 95.63 area, which was close enough to be almost reached in mid-January, and a secondary harder to reach target X1 in the 99.83 area. However, the construction of a rounded top over January has tempered the opportunity for such an immediate move higher. Yet, I had also recently laid out the situation that for this rounded top pattern to work, we should see a halt, followed by a move up and through the previous highs of January, if this is to be a bullish variation of the rounded top pattern. Thus, watch out for any build-up of bullish steam in the next few weeks. Over all of this is the realization that we had a monthly key reversal up in January, which has not as yet been realized, nor has it been abrogated. So far today, well, a further dip lower, down to the April 2012 high, but then bouncing up and off, though only as far as the median moving average, where it has gotten stuck, it seems. LME 3-month aluminium. A second bearish black crow yesterday, and a suitable follow-on lower to the previous session's immediate countering bearish harami. Interestingly, on Monday, the top was capped by the sideways medium moving average, currently at 24.32. Meanwhile, yesterday was, more or less, capped by the long moving average below, currently at 23.86, after the market first tried a little higher. Another interesting feature was the break and close below the late October last year to early January this year bullish shift pitchfork. This pitchfork had previously been breached and then broken. I have not highlighted it as I was not secure in thinking it is the main pattern here, and yesterday's action further aided that view, enough that I will retire this pitchfork after this commentary. As I've said over the last few days, there may be an alternative narrative to look at here, in fact, possibly two alternative narratives. So, what if the action since November last year to date is part of our head and shoulders top? It may not even be a topping action, but a continuation head and shoulders pattern. In either case, if that is the scenario, then we are in the process of forming the second shoulder right now, with a possible neckline, currently at 22.54, highlighted in dark blue on my daily chart. This is a fairly obvious view, but there is something else here, less obvious. What if the action since November last year develops into another larger diamond pattern? It seems far-fetched right now, but I'm trying to keep an open mind on this. One final addendum. I've previously added a 2023 bullish Andrews pitchfork just in case. The market is nearest the rising lower tine, currently at 23.37, though it has not seen any tine being tested as yet. Not really. It is, after all, a fairly new one. However, if it is broken, then I have no compunction in retiring it and replacing it with a bullish shift pitchfork, or even retiring it completely. So far today, what looks right now like a bearish opening black Morobozo that has punched down through the low of yesterday, which was the support from the June 2018 high at 23.53. However, it has only managed to get down to the lesser 38.2% Fibonacci line at 23.45, which is just above the lower time. It is an interesting level for the market to look at, as it may well be the decision point as to whether this market goes for a head and shoulders top type pattern or not.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.